This video is sponsored by Bityard. With over 400 cryptos to trade on their spot, perpetual coin futures, USDT futures, with leverage of 1x to up to 125x, you can trade foreign exchange, commodities like gold, silver and oil, and traditional markets like Nasdaq, all with some of the lowest fees available on any trading platform. You can use their copy trader to copy other traders with better performance than you, or you can become a copy trader yourself and earn a few extra percent from the people that follow you. Plus, you got 9 out of 10 stars from the Coin Bureau guy. Bityard! Hello everybody, welcome back. Let's have a look at some traditional market stuff, some commodities in what I think is going to result in the everything bounce. So that's what I've coined it, the everything bounce. This will be my third video. I started making them on Thursday, made one on Friday. So there's not going to be a great deal of difference at the moment, but it's still working the way I expected it to work, although it's extremely early days. So before we go into it, subscribe to this channel, put the notifications on, and tell your granny to share it. So let's have a look at, first of all, food, which is wheat. And again, there's a lot more to it than this. There's all supply chain issues and all that kind of stuff, but wheat's going to give us a rough idea of food prices. So far from the peak, we're down 23, almost 24%, and probably falling as we're down below most moving averages of significance on this daily here, with a target of around about 937 to maybe 900 flat. And that's your 200 exponential, 200 simple moving average. Again, there's nothing particularly bullish on this chart. I think it's peaked, and I think it's coming down as a result of peaking like that. The weekly looks pretty nasty, to be honest with you, divergence, and below the 20 weekly, which is what we wanted to see. We did catch a little bit of a bounce on that, but now we're broken down or breaking down below it, which would suggest further lower prices. Here's your 50 simple, 50 exponential around 915, and your 50 simple just below 900, 874. So it does suggest that these areas are the general target zones around that rough 900 zone. So again, that's a nice retracement, and it could just be in the broader picture of a giant consolidation to be picked up. That's fine, 35% maybe from the top to maybe where it sweeps its low, or maybe it breaks down from there. But wheat has been a pretty good trade for a while. It was only about a year ago I did buy into wheat and sold it in this uptrend. You know, shoulda, woulda, coulda held it, but obviously I didn't know what was going to take place over here, and we all know why it spiked, and it's the situation over in Ukraine and stuff. So yeah, I mean, it does look very much like a consolidation, and one that's likely to go deeper. And if we think about the previous highs, that's coming in at around about candle body highs, about 850. So it would make sense that on a horizontal basis and a TA basis that it does consolidate down to 900 or maybe a little lower. So that's good for inflation figures. Let's have a think about the Dixie. So the Dixie continues to come down as well, which is good as well. This is 4 hourly. It's coming down. It's not massively bearish, but it's definitely coming down, which again is good for inflation figures. I'm not saying that the dollar has peaked, far from it. I've got price targets of next stop of 106, and then to 108, and then maybe even 120. And it all depends on inflation and what the Fed decide to do. But it does look like on this occasion we do want to come down further. Now, we had a decent retrace over here, found a bounce, and it looks to me, it looks like it could be a double top kind of vibe. You know, we've got bearish divergence like we seem to have had for best part of a year, and they kind of do play out to an extent, but not much, because you can't fight the Fed, and it's the Fed that we're trying to fight, and you can't fight the Fed. So TA stands for something, but as we all know, we're all sitting around waiting for Chairman Powell to speak. What's he saying? What's he going to say? And what's he going to do? And then the price of the dollar moves up again, obviously. So TA works to an extent. Like I say, back in September, we said it was going to go up and that there's going to be a bullish year for the dollar, regardless of the Fed. But the Fed has always been on our mind. But we knew that it was going to break bullish. We saw that it was breaking bullish around September. We had all the signs of a bullish chart, and lo and behold, it's bullish. But you know, it can clearly consolidate and go down lower than it has on this peak, and that would mean a prolonged downtrend for the Dixie. And it doesn't have to happen, but it looks like we are at least going to get a double top kind of vibe around here and consolidate and go sideways for a period of time. So rather than continuing to go all the way up all the time like we have been doing since, well, longer than September, we were talking about it in September, but it had found its double bottom lows around these areas. And people were in disbelief when I was saying, I think it's going to have a... You're an idiot, man. Dollar's going down. Max Kaiser told me so. And I'm like, all right, sorry. But, yeah. But then, as we see now, it's going up, and now it's the opposite, isn't it? Dollar's going to go up, all the way up. Max Kaiser, actually, Max Kaiser is not going to be saying that, but I mean, I like Max Kaiser. Don't get me wrong, I like him. He's a good lad. But you know what I mean, the general masses only see what's in front of them and fail to see what's likely to come down the line. So I'm not saying that this is going to retrace all the way down to where it came from quickly. It will most likely do that over time, and this is where Max Kaiser is correct. I'm talking about Max Kaiser a lot, aren't I? On the long-term time frames, he is correct. The dollar is designed to go down like this, as are all currencies. Remember, inflation is supposed to be at 2%, which means that we accept inflation as part of normal life at between 2 to 3%. That's part of normal life, and so that basically causes this. Generally, that is the nature of fiat currency. So he is correct. But it doesn't necessarily mean that we can't go up further. But for the moment, it does look like a bit of a double top. And it wouldn't surprise me to see us break down further and go to these more, I say, appropriate levels, around about 100, you know, maybe between now and, you know, later into the summer. Before we find another bounce from there, maybe. I don't know. We'll have to monitor the situation. There's no bearish signals on this. It's just an expectation from my perspective based on general inflation data coming in and saying that it's peaked, and then, you know, tapering kind of to slow, and maybe even some quantitative easing. You know, that would be nice, wouldn't it? But yeah, it does look relatively peaky to me, and the dollar could come back down. And this is all part of why I think the everything bounce is an appropriate thing to consider, because it's against everything that the general population seems to be talking about. Everyone's going, oh, it's going to crash harder than you've ever seen in your life. Everything's going to go down. It's going to be the worst thing you've ever seen. And I'm like, alright, that could happen, and you know, we can maybe make a video on what could cause that, because it's not going to just be caused by inflation data to have a massive big crash like that. Inflation on its own won't cause that. But as you've seen in crypto, you got stuff like Celsius and miners selling, all that sort of stuff. If that were to start to happen in traditional markets, like big margin calls and banks failing, so loans and mortgages and all that kind of stuff, like in 2008, yeah, that would cause a domino effect for stocks, and that would cause a big crash like that. But we're not there yet. We're not there yet. And so this everything bounce looks like the most appropriate situation to occur at this current moment in time. So again, I'll give it another 2 weeks or so to expect that to happen. On top of that, actually, if we just go to wheat, was it on the daily, I believe? Let me just double check all of this. Yeah, we confirmed a short signal on wheat as well. So here we go. Chico span below price action, negative crossover here, price below the cloud. Everything you need to know about a short signal for an itchy cloud, really. So that is it. And obviously a red portion over here. So that's your short signal. So that suggests similar kind of vibe to what happened with Bitcoin when it got its short signal on the weekly, which again caused a much bigger drop. But this is crypto we're talking about. Short signal in the same kind of vibe, below the cloud, price below the cloud, cheeky span closed below the price. We've got our red portion of the cloud here, and if we measure that 26 periods to where the candle body closed and opened, that was a short signal generated from this weekly candle open, which caused a 48% move. So this is how you play the itchy cloud. Someone showed me, he's a big YouTuber as well, someone showed me a video of somebody trying to use the itchy cloud, and he's got like hundreds of thousands of subscribers, and he's going, well, anyway, he wasn't using it right. I don't know what he was doing, but that's not how you use the itchy cloud. There's a number of ways you can do it, but if you're looking for signals, I mean, this is how you do it, and that's what we've got on wheat. So again, another bow in for another string in the bow for wheat shorts. Not really. Yeah. He's probably better at explaining himself, which is why he's got the subscribers. I can't speak to save my life. Right, so we've done Dixie, we've done wheat. Let's have a look at oil. So oil is a bit of a do or die moment. So this is the only real thing that could ruin the everything bounce, and it's this 110 sort of area. It's not particularly interesting when you look at it on a horizontal time frame, but it does mark these tops over here. But again, it's neither here nor there. We all know why oil's going up, and it's the same reasons that wheat's going up. But oil equals fuel equals high prices equals inflation, and it's arguably one of the bigger components to inflation, because food prices can be expensive, but then you've got to think about travel, the movement of that food from farm to factory to shop to your house, All of that requires fuel, so fuel prices need to come down in order for inflation to really see a big change. And I would say that this is the moment, really, not the exact moment, but this is the price. Let's say 110 for a barrel of oil is expensive. Not to say that we can't float around between 75 to 120 throughout the best part of this year, maybe into next year or whatever, but we do need to see this start to come down as soon as possible, really, because this is going to feed the next CPI data. So I know everyone's pointing their fingers at Russia, and there's more to inflation than just that, but it is insult to injury. Let's face it, it's insult to injury. The Fed are to blame for all the stuff that they did after the pandemic. That's fine. You can point your fingers at them as well. There's finger pointing everywhere, and it's all appropriate. But yeah, Russia, fuel, big problem, and this to me is going to be the main thing to focus on to try and front run the next CPI inflation data. And at the moment, it's not really giving up very easily. We do need to see it going down below 110. 110 is not really going to touch the sides for inflation, but below 100 should start to, and anywhere below 100 would feed into a decent inflation report. So showing inflation peaked, adding confidence to the markets, allowing for the everything bounce. And I would expect, to be honest with you, to start to see a correlation between oil and stocks, basically doing the inverse. So if we start to see oil coming down, we should start to see stocks going up, and vice versa. If we start to see oil going up, we will start to see stocks going down. I think it's going to be kind of that simple, really. You know, the DIX is going to have a major component, wheat to an extent, but it's all really about oil prices. So we do need to see oil come down, and I think, you know, it's not me alone. I'm pretty sure there'll be other people looking at it in the same way, and I think markets generally will reflect this. It's going to kind of be that simple. But anywhere closing above and staying above 110 is a problem, and we'll probably see stocks sideways and down. Anywhere below 110, we'll start to see stocks pick up pace, and then that might end up being a snowballing effect. So stocks start to go up even higher, oil start to go down even lower, and then they will find some medium ground where they've decided that stocks have peaked for a moment. You know, maybe that's the dead cat bounce, the everything bounce, or the dead cat bounce that we're talking about, and then we continue with the bear market. But again, I think it is that simple. So focusing on oil being above or below 110 is the main thing. So again, we can quickly have a look at NASDAQ. So this is NASDAQ, and this is NASDAQ in the pre-market. The pre-market already looks very peaky on the 4-hourly, to be honest with you. It's very peaky. So I'm not convinced of anything special happening today. But yeah, the pre-market is basically what it is. We need to focus on the opening market bell today, which is going to be 2:30 UK time. And then we will start to see what it is that these markets have decided amongst themselves, because that's more or less what it is. We are close to a tipping point, and so the tipping point is oil at resistance, significant one. Maybe not, I wouldn't even probably call it resistance, but at a significant level, 110. We need it to come down from 110. And most stocks, as in major indexes of stocks, of NASDAQ for instance, approaching significant support. So this is the tipping point, really. Is where we know if something works out. And remember that just like Bitcoin, we are in a major bear market for all stocks. This is a tech sector, obviously. We can bounce significantly within a bearish formation and still receive a 25% move, give or take, for the NASDAQ. That's a decent move, and that would be reflected in crypto, obviously, because that's what we like. But yeah, it's still in a consolidation or bear market, whatever you want to call it. Trading within a triangle is often quite deadly and dangerous, but I'm happy to try it, given what I'm looking at here and what I expect to see for Dixie, wheat, and hopefully oil. But again, oil's not really giving up that easily. Same thing with the Dow Jones Industrial Average. This is a pre-market of that. But yeah, coming down to a major situation here, the major support. Although it looks quite good down here, it's still a major support, so tipping point. So like I say, you merge these things together, you got, hopefully oil gives up the game here, it comes towards 75, that'll be perfect between now and, you know, through into the summer, maybe moving into the fourth quarter, where there'll be more of a significant demand on oil, obviously as things start to get colder. And yeah, so we might be looking at this everything bounce to you know, if it's going to happen, it's going to happen now. It's going to happen in the next couple of weeks. And if it doesn't happen, then everybody else is correct in what they're saying, which is that this is going to be the worst thing we've seen in our lifetime. Get under your desk and hide. So yeah, I mean, it's just another update. There's nothing really different about what I'm saying now than what I was saying on Thursday and Friday, but we're going to monitor it, mostly oil prices. We're going to monitor those oil prices, and that is going to be the definitive direction. So oil down, stocks up. Simple stuff, really. Simple stuff. You get all these posh people on Bloomberg with all their shirts and suits on, and they're boiling down certain things. But I think it is kind of that simple. I know it's hard for people to digest when you say it like that, but it kind of is that simple. It takes away a lot of the fun that people like to have when they're drawing all their little, and we do this and this and then blah, blah, blah. Nah. I think we can make it as simple as it needs to be, which is 110 oil below, good. 110 oil above, bad. There you go. So again, wheat got the short signal anyway, but oil is yet to play anything like that, and we will keep our eyes on the prize. Anyway, thank you for watching. Hope you have a nice day and take it easy.